Hi there. Losing money after investing is a crazy situation for anybody out there, regardless of the amount of money you have or regardless of your net worth. Look here, an individual lost 340 million daily over the past 1 year, accumulating to them losing a fortune of 124 billion in just 1 year. Guys, that is Elon Musk. Elon Musk, the CEO of Tesla, SpaceX, Twitter, just to mention a few big companies out there, lost a fortune of 124 billion over the past 1 year. That drilling down to about 340 million US dollars per day. And the crazy thing is that despite that humongous loss in his fortune, he is still the richest person in the world. That is how insane it gets. Many people out there dream of just having a net worth or a fortune of $1 million. Others way below $1 million. And yet, an individual out there can lose upwards of 340 million US dollars in a day and still be the richest person in the world in 1 year. This tells you one thing, that Elon Musk really paid his dues over the past tens of years and invested continuously to ensure his wealth grew exponentially to a point where he can easily lose hundreds of billions in net worth but still be the richest person in the world. That's why I'm making this video to share with you 5 key pointers you need to take into consideration when you're thinking about investment and in the quest of you building wealth. You are all much welcomed to the Money Daily YouTube channel. My name is Afagza Sifuna. By the way, if you're new here, remember to subscribe. Subscribe for you to be getting notified each and every time I upload such an awesome video like this one. The very first thing which we all need to understand is that wealth grows over time. If we're truly speaking about making wealth, you're going to be able to grow your wealth over time. Of course, there are those periodic windfalls which one might get here and there, but they're not ever sustainable. And I'm saying so because for somebody to be able to make wealth, they need to understand the fundamentals of investing, which actually takes time to grasp. And also, it is through these that somebody is going to be able to learn the lessons relating to money and also learn the tactics which are essential to growing wealth. So understand that building wealth takes time. And don't, for example, think about becoming a multi-millionaire in 1 year, in 2 years. It might take you 5 years, 10 years, you name it. And throughout this journey, you gotta be learning the essentials of investing. And then the second proper understanding you need to have when it comes to investing is that compounding is key. Compounding is essential. What do I mean? You know, guys, it is through compounding that anybody out there is able to grow their wealth exponentially. Compounding is essentially someone out there not cashing out their returns, not cashing out their profits, rather allowing these profits to combine with the initial principal and continue increasing their wealth. It is exactly that what compounding is. To give you an example, you might have someone, for example, who's having a business in a retail shop. If each and every day they cash out the profit for their own consumption, and there's another person who's doing the same business, but each and every day they're applying back their profit into this business, even though their profit is not going to be at a constant rate, it's going to be fluctuating sporadically, most likely the person who's plowing back their profit into business is bound to see their wealth grow exponentially over time, as opposed to a person who's cashing out their profit and only leaving the principal amount in that business, right? And then the third essential lesson when it comes to growing their wealth is understanding that diversifying is essential. Diversification combined with portfolio concept is very important in quest to someone building their wealth. Look here, guys. Just an example I've given you all. Elon Musk wealth plummeting was actually driven by the shares of Tesla plummeting by about 50% over the past 1 year. The good thing is that Elon Musk has actually diversified his investing because he has investments in multiple companies out there. Talk about 7+ companies out there which are essential in driving his net worth. Had Elon Musk, for example, only had his entire net worth in only Tesla, then we're going to be talking about a very different scenario. But he has diversified his wealth across different companies. Talk about Tesla, talk about SpaceX, talk about Neuralink, talk about Twitter, you name it. All these has assisted cushioning because all these are companies in different sectors, in different industries. And as such, the risks inherent in different industries out there vary. So ensure you diversify your investing portfolio for you to be able to cushion losses against any single stock out there, right? And then the fourth investing essential which you all need to understand is that sometimes in investing, perception can really drive up or down value. Case in point, Elon Musk's plummeting of Tesla stocks has essentially been because of investors out there having a different perspective with regards to how the CEO is actually dedicated to the company. This more so came up in the last quarter of the year, whereby we've seen Elon Musk dedicate a huge chunk of his time on Twitter, business, and as such, investors in Tesla are having doubt with regards to if he's actually running the company appropriately. You know, this perception has actually led to plummeting of Tesla stocks. It is as simple as that. At the end of the day, it is perception and behavior of a company management and also key investors, which is going to really build the confidence in that particular company or not. And this is going to translate to stock value. Guys, you need to understand as you're jumping into these spaces, at times, perception matters a lot, and it's going to actually lead up to someone even losing the entire wealth in any particular investing. And then, the fifth and last lesson you need to understand, and if you're a savvy investor by now, you know, high risk most of the times dictates high return. That's why the people are able to grow their wealth exponentially out there, actually take risks which others out there think they might be foolish moves, but in the long run, they pay off. To give you an example, this year alone, Elon Musk sold stocks in Tesla worth $44 billion for him to be able to finance his acquisition of Twitter. From a layman's view, it might look like, for example, it is a bad move. Why should someone, for example, go out there to sell stock in a company which is doing well, championing electric motors and so forth, to put money in a free social media space? But the bigger picture is actually very massive because Elon Musk might just be able to recover this money in the next few months or even the next few years. This is because he has a business plan. So if you have a business plan and you've actually done your due diligence to understand if a given acquisition is okay or even if a given stock is good, just invest.